Vi väntar 5 minuter till, va? Ja, jag tror att vi kan börja. Det är ganska många.
Det låter bra.
Hello, everybody, and welcome to the final midweek presentation. Today, this morning, we have in our midst Carl from Unga Aktiesparare. Carl will be presenting to us more information about the organization and help us to be able to invest wisely. Thank you everyone for attending so far, and don't forget that we have the competition at the end of the presentation, and we also have a grand finale today for the people that have attended most of the presentations and also use their real names during their attendance. And welcome, Carl.
Thank you so much. So good to be here and for today at least represent Unga Aktiesparare and not Malicon. So it will be a good thing, I think. So I hope you all are ready. So I think we should start, right? Good. So the agenda for today is that I will talk a little bit more about who I am and what Unga Aktiesparare is and what we do on a weekly basis. Then I will move over to some knowledge about stocks and the stock market and how to invest and how to trade. Then I will go into some other instruments such as funds and other things that could be useful to just get an overview of. I will end it with a Kahoot that will be a competition from our side about a book. Depending on if you are Swedish or English, it will be different books, but that's the competition. And after that, I will take all your questions. So if you have any questions during the lecture, write them in the Q&A function here in Zoom, and I will lift all of them in the end. So we could also go back into the presentation if you want that, and if it's something specific I want to show. So no problem that. And I hope that everyone has time for this hour and maybe a few more minutes after that. So also Malicon have time for the competition. But I think we should start. So who am I? I'm Carl, and I think the most of you know me from Malicon already, but I'm also the chairman of Unga Aktiesparare here in Västerås. What we do is that we teach knowledge about investing we invite companies to talk about their own business plans, and we can also go and visit companies if the situation in the world can agree on that it's possible to do so. And we also teach in other forms of investing and basically finance in its whole. Unga Aktiesparare is a forum for young people under the age of 29 who wants to extend their knowledge in finance and investing, but it's also for a great place to find peers with like-minded as you maybe be and to network on these subjects. We have about 13,000 members all over Sweden, and there is 45 branches from south to north in the whole of Sweden. So we are pretty big, and we're a pretty big like organization for this specific topic. We have some golden rules, and throughout this presentation, there are some pictures that might be mixed Swedish and English, but I will explain everything in English so you don't have to read it and try to understand the Swedish. But the 5 golden rules we have in Aktiesparare is that you should know what you're buying, you should always keep yourself informed, you should save on a long-term basis, you should save regularly, and you should always spread your risks. And remember, everyone will do mistakes, and it's good to learn by doing, but the sooner you start, the less the mistake will feel because you have less to lose. And it's always a risk to invest in securities. So just keep in mind that everyone have done mistake or will do mistake. And if you do it, it's not the end of the world. It's just a bump in the road, and you should just continue with what you're doing. So here is some contact information for Unga Aktiesparare in the whole of Sweden, like our national from our headquarters in Stockholm. So we have the normal Instagram, Facebook, the homepage, Twitter, YouTube, and we have a podcast. And I could really recommend you guys that want to start to find information about stocks and the finance market to go to either Twitter or podcast, because those are for me at least, the greatest resources where you can see like financing profiles, and they are talking about different stocks or the situation right now or trends or industries or whatever you could think about. So what if you were becoming a member and what do you get? So you get so many things if you're a member in Unga Aktiesparare, and this is just a few. And the reason why I joined Unga Aktiesparare was maybe not in the first case for all of these. It was for the most part that I wanted to find a network where there were peers just like me, where I could discuss my interest with them. And that is exactly what I found. And that's why I enjoy being a member of them. So if you are Swedish and understand Swedish pretty well, go to our site and become a member today, because I know you won't regret it. And we have so many good events all over Sweden that you can attend digitally right now. And of course, don't hesitate to contact us here in Västerås. Our names is up in the top right corner. And even if your question is in Swedish, English, stock specifics, or markets, just send us a DM in either Facebook or Instagram, and we will answer as good as we can. So I will start with some basic knowledge about what you might need to know before you start investing. And the first one is that we have 2 different ways of doing this. And we have 2 things that is called brokerage and banks. And I know everyone here knows what a bank is because everyone uses those in their day-to-day lives. So you see them on the right side, and everyone knows that they provide you with a card or an account. You get your payslip from there or your CSN. But they also offer the possibility to invest your money through their functions, but that's not what we say is the best. And we think that brokerages, which are specifically towards stocks and funds, is so much better because their interface is just so much easier to understand. They have lower fees, and it's just a wider spread of information that you can get from them instead of banks. And then you can get some different form of accounts where you can buy stock and funds and other instruments, of course, but those are the 2 we will focus on today. And this picture is in Swedish, but I will explain what it's basically is meaning. So you have 3 big categories for accounts. It's investeringssparkonto, otherwise also called ISK. You have kapitalförsäkring, and you have a stock account or a fund account, which is the one to the left. The difference you can see in this chart here, but in the på-konto, as it say here, and investeringssparkonto, you own the actual share that you buy. But in a kapitalförsäkring, you don't own it. The bank owns it legally, but it's still your money. That account is really good for two reasons. Either if you're saving for someone else, maybe for a kid or for whoever you want, because you can write in, if something happened to you and you have your money in a kapitalförsäkring, you can write who the money should belong to if you pass away. That you cannot do in either investeringssparkonto or the på-konto, because they follow the normal heritage rules, if you say it like that. So depending on in like what line of family you are, it decides on who will get the money that you have made. The på-konto is the most like old school form of account, where if you have a stock in there that generates a profit, and then you sell that stock, you will have to pay 30% profit tax on that amount that you have gained in value. Not the whole amount, but only in the gained value. But in the kapitalförsäkring and investeringssparkonto, you will only pay an annual tax, you can say like that will be deducted from your account once a year. And it's like 0.75 or 0.8%. So it's super low. And today, investeringssparkonto is the absolutely most popular form of account to save stocks in. Another thing with kapitalförsäkring is that if you have, for example, an American stock that gives out dividends, and they give it to your account, you will have to pay a tax if you have either an investeringssparkonto or the på-konto on 15% källskatt is called. I don't really know that word in English actually. But if you have it on the kapitalförsäkring, you will be giving back that tax amount, because that is only because different account rules, basically. And just so you know, this is the first time I do this lecture in English, so bear with me that I'm struggling a little bit with the words here. So we also have these forms of transaction and trading fees that you will see, and depending on which bank you use, you will have different amounts, because they set the rules themselves, basically. And in Swedish, it's called courtage. It's a fee for buying and selling a stock. And if you buy or sell a fund, it's called a management fee. So you have different classes on these depending on how much money you are buying and selling with. So for example, if you take here courtage class 1, you have 0.25% of variable fee, but a minimum of 1 crown. So if you make a trade of 300 crowns, the stock is basically valued 300 crowns each, you will pay 1 crown, because 1 crown is higher than 0.25%. Yeah, exactly. But if you make a trade for 5,000, the courtage will be 12.5%, or the fee will be 12.5 crowns. Because that is 1 crown is still the minimum and 0.25% is higher. And you can see here, if you have the other class of courtage, you will have a lower variable fee, but a higher minimum fee. And that is a class that is made for those who make big trades, who maybe buy and sell over 100,000 shares at once, or depending on which stock you're buying or selling, you will see the prices is different. Then you have some different fees that can come into hand if you buy foreign stocks, or if you are into some little bit more unusual form of instruments, such as warrants or options. I will not go into them, but you see there are fees also there. Everything is though very good explained when you buy and sell stocks or other instruments, so you won't get a shock or like get a fee deducted from you without you knowing it. This is an example of how it looks on Avanza, which is the main bank and the bank I actually use for my trading, and I really enjoy that. So if you have less than 50,000 crowns in your account, you will have 0 fees. It doesn't matter if you have either funds or stocks, you will have 0 fees on all your trades. But then if you surpass that amount on your account, like the whole value of the account, your capital, you will automatically be included in the categories called mini. And there you see exactly how much money that account fits for and how big the trades you should do in that class. And as you can see in the bottom here, you see that mini, small, medium, and fixed price is all depending on how big trades you do. That is basically what they mean. And if you know that you're not going to buy and sell stocks for less than 15,600 crowns per time, you can use mini. But if you know that every time you buy and sell stocks, it will be over 143,000, you should definitely use the fixed price. So this is good to look into when you decide on how much money you want to trade with. So I'm jumping straight into some more knowledge about the specific stocks. And don't forget to write all your questions in the Q&A, and I will take them in that. So what is a stock then? A stock is, as you maybe already know, a part ownership in a company. When you buy a stock, you will be an owner of that company. And for you, you have some rights and some ways that you can lose or earn money, of course. For the company though, it's a financing source in the most part. Like they are going public because they want more capital into their business so they can expand or maybe buy another company or just restructure or reorganize. But for you, of course, you want to make money on the trade. And you can do that in basically two ways. Either you can get dividends from the company if they give that out and you can see all that information in the bank, or you can take part in the value increased of the company. And you also have some rights in this, which is that you are allowed to buy and sell whenever you want when the stock market is open. You will get news or updates about the company regularly, and you have a voting right on the annual general meeting of each company you own. And you can never lose more capital than what you have invested from the beginning. But of course, you can still lose money in different ways. And the biggest one, which is really rare, is that a company will go bankrupt where you have your invested money. And then you will lose 100% of what you put into that company. But that is so rare, so you don't even have to think about that risk. And for you as beginners, I would never recommend you to buy a company that is so insecure and so like something that you really hope to gain a lot of money in, because they are super risky. But of course, the normal thing that happens is maybe that your shares lose value because you have buy at the specific price, but then the supply and demand goes down and the price goes down. We have some different things in the category of common stock, as it's called. Either you have an A share class stock or you have a B class. And I will also mention a little bit about compound interest, which actually Albert Einstein called the eighth wonder of the world. So the difference between A share and B share is basically the voting rights. Sometimes the price, but those are almost always the same. So if you buy an A share, you will get 10 extra votes. But if you buy a B share, you will only get 1 vote. And the difference there is that if you are going to the annual general meetings and you own 1 A share, you will have 10 votes. But if you own a B share, you will only have 1 vote. But we are all retail investors and we are probably not going to own that much in a company that our vote will make a difference. So I would always say that it's better to look at the B share because they usually have a higher trading volume and the price will be more corrected. And it's also easier for you as a trader to buy and sell the stock because there are more buyers and sellers on the market. They always have, if they pay out dividends, it's always the same for A and B. And if you see on the 2 bottom pictures, it's Berkshire Hathaway. Here you can see their class A and class B stocks. So you see firstly, you see my arrow here. You firstly see the pricing of the actual stock. You have the latest one was $267. But in the class A, you had the latest of $402,961. So that is a pretty huge difference. And that is only because they want to separate investors who want to take part of the company growth and those who actually want to be like actively deciding on things in the company. You can also see here on the more right that the number here on top is how many shares that have changed owner during the day. So if you see at, if you see at class A, you have 1,635 stocks have been traded during the day, but in class B, you have 1,913,000. So that is a pretty huge difference also. Another extremely important thing to know about like stock investing is compound interest, which is the basic principle of why and how we buy stocks in today. Because we all expect a profit after a year invested, for example. So if you invest $100 the first day, and then after a year, you have increased that $100 with 50%, then you will have $150 after the first year. And then you expect the same thing to happen year after that. But those 50% will have a huger difference on $150 instead of 100. So the compound interest will just grow exponentially, which is the most important knowledge to know about why you should invest in stocks and why it's the most profitable way of saving your money. And you see a short graph here that explains basically how it happens. And that is the biggest reason to why you invest in stocks. So that is extremely good to know. So a pretty big picture here. And I will talk a little bit more about the market, the index, and the cap size of companies. So firstly, on the left top here, you see how OMXS30 have gone during the day. OMXS30 is the 30 biggest traded companies and biggest companies in Sweden right now. And that is one main index that the most users look at. And if you look at the world map on the right top, you can see that we have indexes for basically every market in the world. And you can follow them. It's not completely sure that you will be able to buy depending on which brokerage you choose to use. It doesn't really assure that you will be able to buy in all these markets. But here you get an overview of how the stock market have gone in each country and in each index during the day. On the bottom left here, you have market capitalization, which is basically a category for how big the companies are. So firstly, you have the small cap, and it's pretty easy to divide in because in the small caps, you have companies that maybe you as a retail investor or whatever doesn't really know so much about because they're pretty small companies. And small is a definition question in this matter because they all still have a market capitalization of under $1 billion. So that is classified as a small company. And then you have the mid companies where you maybe start to recognize the names, so as Dunkin' Brands, which is basically Dunkin' Donuts, and you have Colombia. And they are between $1 billion and $10 billion. And then if you look at the large cap companies, you will for sure know them because they are so big. And those are, for example, Apple and Amazon. And then if we talk a little bit more about the indexes that you can look at, they are to the right here. And they are all only an indicator about how different industries or how different currencies or assets is working their way through the day and how they are progressing in prices. So here you, for example, have a Nordic industry index, which is material, finance, insurance, transportation and flight or aerospace, healthcare, consumer goods, energy, building and property. And then you have like the normal ones, which is only the industry index for Sweden. And then you have the same here, industry, healthcare, financing, and property. So I know it's a messy picture, and that's the problem basically with like investing in it all. There's so much information you have to comprehend and understand. But when you start, you will get a much bigger and better view of it. So how and why should you invest in stocks? You can do it in basically two ways. Of course, you start at a brokerage on a stock market, but then you can either choose to own the shares directly through wholly owned shares, which is that you decide exactly which company you want to buy. You will be paid out dividends by those companies who give it out, and you will get the compound interest as I talked about earlier. and it's the most profitable way of investing. Then you can choose to go through investment companies, which is basically a fund, but it's a traded company that invests in other companies. So you get analysts and managers that will handle all their investments, and you only buy their knowledge, basically. You will still be paid out dividends from that specific investment company, and you could also get a net asset value discount, as it's called, or in Swedish, some might need to know that it's substansrabatt, which is basically if the investment company owns 10 shares and each of them shares costs $100 each, but the investment company on the stock market only costs $80, you will basically earn or get a discount of $20 because you still get you still get like profit from those 10 companies, but you don't pay full price for them. So why should we then invest? It's of course because you never know what happens, and that is so relatable after this year. There could be an economic crisis. People can lose their jobs, or you just need some backup money because some enormous thing happens in your life. Or for us that is so young, we don't know how the pension system will work when we grow old. Or you just want to go out and travel. You need to buy a home or a house or build a house. You want to start a company, or you just want to have an excess of consumption later. So please write your why and why you would like to start investing in the chat. It could be really fun for everyone to get an idea of why people are interested in this. So some risks and price that is really good to know. And one of the golden rules Unga Aktiesparare has, as I mentioned earlier, is to not lay your eggs in the same basket. And that basically means that don't invest all your money into one company at one time. That is so important because there is so much risk with that. And if you look at the picture on the right, you will always have a market risk. Like to invest your money is always a risk, but it's also the only way to actually secure your money for the future. And then if you choose, as they explain here, 30 stocks, the risk that the company specifically gives you will be eliminated because you have spread out all your money into so many different industries and to so many different companies. And you can also look at other risks, which is, for example, cyclical. For example, SkiStar here in Västerås, who owns all the ski resorts, they are, of course, gonna have a better finance during the winter year than during the summer year. And that is something called cyclical company. Then you have other companies that have an interest-sensitive way of doing business. You have defensive stocks, you have growth stocks, and you have investment companies. And all these is risks in one way or another, and the price is accordingly. And if you look at today also, you can see that tech shares have taken a big hit, especially in the United States, because interest and the bond situation over there indicates that investors more likely to look at purely like value companies instead of growth companies. And then if the retail investors change their mindset to go to another industry, that other industry they were in before will take a hit. And of course, how retailer thinks about a specific industry or a specific company will affect the price. Here is a pretty good graph that shows why the importance of saving is so huge. You see the graph from 1969 to 2019, and you see the difference in growth per crown if you invested in stocks, if you invested in a savings account, or if you just had your crown lying at home. So if you invested in stocks in 1969, that single crown would be worth 6,317 crowns. And you see that a savings account, 51 crowns, inflation, 1958 crowns. So it's a huge upside on investing. And that really tells that you see the graph that is blue. Of course, it's bumpy. And all of these are crises that have happened. So here, example, this is the IT boom or IT crash in the beginning of the century. And then over here, you have the financial crisis. And then over here, you have the banking crisis. And right now, this is only to 2019, but if this graph would have continued into 2021, you would have probably seen something like this happen one more time, but here. That was what I had on basically stocks in whole, but I will move more into funds now, and I will take that pretty quickly so we can manage everything else after this. So what is a fund then? A fund is pretty similar to an investment company. It's a portfolio of securities. And the difference between investment companies and a fund is that a fund have much greater way of where they can conduct business and what they can invest in. And for you as an investor, it's very easy. It's risk diverse. You always can trust your professional managers and analysts to maybe make a better job than you do to invest and analyze the right companies. It's easy to save regularly, and you have the possibility to get your hands on markets that you maybe couldn't touch with stocks, because fund managers have a much wider market to look at, because they can go into, for example, Africa or Asia or Indonesia or Australia and buy companies there, which you cannot do from the most normal brokerages we have, for example, here in Sweden at least. Avanza, for example, only has some parts of Europe, United States, Canada, and Sweden, Norway, the Nordic countries. But a fund manager can go all the way into Jakarta or Australia, as I said. And this is the, for sure, most used and liked form of saving for the Swedes, because 85% of us have had some form of knowledge and invested money into funds. The drawbacks with investing in a fund is that you always have a fee that is called a management fee connected to it. You have less control and freedom to what you want the fund to invest in, because they make all the decisions. You won't get a dividend, and you won't have any voting rights on the companies that the fund actually owns. We have some different form of funds also. They're basically divided into two categories. You have the securities funds, which is the most normal one, stock funds, index funds, mixed funds, and interest funds. And then you have the special funds, which is hedge funds, ETFs, and thematica funds. And we can start with security funds. Stock funds, they are basically only investing in actual companies. Index funds are only trying to follow a specific index, as I showed earlier. Like if you buy an index fund that is weighted towards, for example, like an industry index, they're only trying to match that. They're only going to buy those companies that are in that index. Then you have mixed funds, which is a mix between interest funds and stock funds. So they always invest in either or both interest rates and stocks, which is a pretty risk diverse way of investing your money, and it will also give a lesser return of your money. Then you have the special funds, which is hedge funds. They have so much more moving, like how they can move around the money into different form of instruments where they want to save the money, as you see in this picture in the middle. Like they can buy everything from real estate to currencies to options to ETFs to bonds to interest. They can buy whatever they want basically, and you just go with it. This is a good picture that shows like how the investment over 10 years have gone for different categories of stock. The blue pillars is Swedish stock funds, and you can see that they have the highest amount of gain in value, but it also had the biggest drop off when the market crashes. So you see, for example, between 2007 and 2008, they had the biggest deficit, but also the biggest positive value increase. And if you look at the mixed funds, which is both interest rates and stocks, you have the medium amount of growth and the medium amount of deficit. And if you look at the bond funds or interest funds, they have the smallest amount of growth, but also the smallest amount of loss. So I know I've been going through this quickly, but this is only like the basic, and we can have an open dialogue later if you want anything like this that could maybe be a bit more in depth into some things, but we can take that after. But a summary of what I've gone through now, at least, is that shares is a part ownership in a public company. Shares are traded on the stock exchange. Shares are categorized into different industries. Investment companies and ETFs is a really good start for you as a beginner because it's the least risk. All these investment types that I've shown today is the most profitable way of saving. Funds is a collection of managed companies, but they have a higher cost than if you would buy a stock specifically. Different fund types is always connected to different risks and different categories. But the most important lesson I want you to take away from this start of this lecture is that no matter what you buy, it's to buy that is the most important, because you will gain so much more interest into the stock market and the companies if you just have your money there. And that is for speaking from own experience. I know everyone will hit any of these points on this picture because I've hit them all. And for example, how should you have your psychology if it's a blue day, which is a positive day, or a red day, or if it's a bear market or a bull market? A bear market, for example, is when the trend of all stocks publicly traded is red or negative, and blue days if a bull market. There's a pretty self-explaining ways of saying it, but blue markets is basically when all stocks are going up in some way. The trend is up. Which potholes should you don't try? Which is basically the FOMO, don't jump onto trends and don't go into the mainstream media. And you see the pictures on the light, right? Right now, there is so much talk about Bitcoin, NFTs, Wall Street bets, Reddit companies. There's so much actually crap out there that is people is talking about, and the mainstream media is right now trying to catch on these trends to gain, of course, more readers. But you should never jump on these trends. Like, if you don't know what a Bitcoin is, don't buy it. If you don't know what an NFT is, don't buy it. I don't say that it's a bad form of investing to go into Bitcoin or NFTs or the Reddit companies, but you should always do your own research and know what you're buying. There is no good way. I have actually been into some of these like cases of FOMO where I just jumped on stocks where other people said they were gonna boom, the hype of them were huge, and I just jumped in too late and lost so much money of it. So don't follow me as an example in that, and always listen to your gut, make your own research before you make a purchase, and be sure that you understand and you have a really gut feeling that they will be a profit for you. So I said also, like, find your own info. Don't listen to the mainstream media. But where should you though find that information? You should never just go on to, for example, Aftonbladet or the New York Times to find your information. You should always like Google first, go to investment sites, or go into like Twitter and look what other investors say about the company. That is the actual best way to find information. And if you find a stock that you are interested in, for example, you maybe have a brand that you really like, H&M or Lyko or whatever, go and read about that specific company and make your own like stake into it and decide itself, is it good or is it bad for me? And another thing, maybe many of you, like, you have to time the market. You have to jump on a company at the right specific time to make the biggest profit. That is not true, as I write in the saying here. Timing the market or time in the market. I would never recommend someone to jump with all their money into one company at a one specific time. You should always, if you, for example, only buying one company right now, you should not buy with all your money into that company the first day. you should maybe first buy 10%, then wait a couple of days, see how the stock is moving, then buy 10% more, and the day after that look again and then buy 10% more, because then you flatten the curve. So you don't hit the spikes and you don't hit the bottoms. Of course, it's great to hit the bottoms because then you will make the biggest profit, but it's so hard to hit those bottoms. And that is everything I say during this lecture, especially during the psychology in this, is from all own experience. So just don't try to time the market, be time in the market. And if you, for example, have bought a stock and it's just going up, 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 and you're like, I made the greatest decision ever. Should I sell on a profit or should I keep it? Always like value yourself and see, okay, do I believe in this company? Do I think this is the top? Or do I think that it should go even higher? Make always those decisions before you take a decision on actually selling or buying. And that is even more important to do on a red day, because then you will have a fear that you will lose your money, because there is still your money, it's your capital. And you can, of course, lose your money. You can make a wrong decision or a wrong evaluation of your investment. But it's so important to really go back. Why did I buy this company? Why do I think it will be a profit for me? Go back to there. Don't sell when everything is red, because that is the most stupid you can do. A big saying in the finance is that you should always buy when others are selling. And that is so true, because if you look at the Corona crash, everyone sold last March, March 2020. If you had bought there, you had made over 100% profit on basically all stocks that you could buy then. And that is so visible and understandable that when everyone sells, and if you have the money to buy them, go for it. But still, go for companies that you really believe in. Don't just buy anything. But it's so visible to see that when others are selling, you can make the biggest profit long term. So if you have any fear, go back to your gut, go back to the day where you made a decision to buy that company, and understand that the fear is only temporary, but the profit can be good in the long term either way. We will take some questions now. So let's see what you wonder. Yeah, will this PowerPoint be available somewhere after this presentation? Yes, this presentation will be available afterwards. It is going to be uploaded to YouTube, so if everything goes correctly, it will be on our YouTube site, Unga Aktiesparare event. How much should I save before starting investing? When I started in 2017, I had 500 crowns, so 50 euros. And you do never need to have a huge capital before you start investing. So if you have 500 crowns, just go with that, start there, find your interest, see what you really enjoy doing, and start looking at companies at least, because you don't need much capital. And this is also another barrier people see and think about, that if you're going to invest in stocks, you need so much money, but you don't. You can buy one stock in one company for 50 crowns or 2 crowns or whatever you would like to do. So you don't need a lot of money to start investing. So the most important, just start with what you have and go from there and build your capital from it. What is, in your own experience, an appropriate amount to invest in a single company when you are a first-time investor? You always look at how much money you're going to have in a few months maybe. And I always look that I want to have a minimum of 10 companies, but a maximum of 20 companies in my portfolio of accounts or companies. So somewhere in between there, if you maybe decide on 15 companies and you have 1,000 crowns, you should divide that into that. But I understand that is hard in the beginning, and I struggle with that also because I started with so little, that you cannot have a ton of money in each company. But if you maybe have your eyes on 10 or 15 companies, start with a few of them and buy one stock in each, so you get to get to know them better, you get the insights and the notifications and the news much better. And then when you continue save regularly, you are able to invest in other companies after that also. So start with what you know, and start with what you have, and buy those that you like, make a priority list and start with the most important for you. Um, Investing in stocks is fun and a great way to get a lot of general knowledge about business, the markets, and the world in general. Also, it is also good to have the savings and some financial insecurity. Exactly, Johan. That is why I invest and why I buy in different companies, because it's a financial security for me. Like the money I invest today, I have no goal with them. I just want to have them for as long as I can without using them, and seeing exactly how big amount that can grow to with my own experience and with my own knowledge. So that is what I focus the most on. I don't have a goal that I'm gonna buy a house or a car or a watch or anything like that for those money. I just want to see how far I can get with them, and exactly, it's so long term for me. I'm like looking at like 50 plus years with this money that I invest in stocks. So I know that like what happened today or tomorrow or next week or next month on the stock market, it doesn't concern me, because the stock market over long term, over 50 years, always moves upwards. So I don't look that specifically on so many companies. I of course look at my stocks every day or like 5 times a day, but I maybe not are such anxious or have so much fear each day when everything happens. Of course I get also fear, I'm only human. When the stock market crashed last year in March, but I didn't do anything, any rapid decisions. I sat down, I just looked when it happened. I maybe even bought some more because I know that is the best way to do it, and continued from there, and just maybe didn't look so much as I did before or after. How often should I check my investments? I know people that check several times a day. Yes, exactly. I'm one of those that check several times a day, but you don't need to. If you are like confident in your decision on that specific company, you don't need to check all the time. But I do it because I have such a huge interest for it and I wanted to learn more. I maybe look at like prospect companies that I want to buy but haven't bought yet. I read about them. I look at how they value change, and I decide from there if it's the right time for me to go in there or not, for example. And it's completely up to you how many times you want to check. In case of planning on investing a smaller amount of money, would you say it's better to invest in a stock or a fund? I would say it depends on two things, like the time horizon of when you will need the money, and the risk you're willing to take, and how interested you are. Those are the three like main categories I would look at. Because if you have a high interest and know like what companies you want to own, buy a stock. If you have a long time horizon and you are certain that you enjoy that company, maybe you're wrong, but right now you feel right about it, buy a stock. But if you need the money in a shorter amount of time and you don't want to take such a high risk, buy a fund. Or if you don't feel secure enough to invest in that specific company, buy a fund also. Like it all depends on how much knowledge you have, how much knowledge you like prepared to get, and how much interest and time you will put into your investments, because that is like the main risk with all investments in time. You put your money in other people's hands and hope that they will go better than if you had them in your hand. Is it free to sign up for UA? No, it's 250 crowns per year. So it's a super small fee. And you get so much knowledge from them. You get to go to so many events. Before you become a member, go and check out our sites on all our activities that is planned for this year. Right now, there is popping up new events basically every week from all local departments in all over Sweden. So go check that out. And if you think that 250 crowns per year is reasonable, become a member for sure. You will also get a welcoming package if you become a member, so you will get some free stuff. What is your opinion on investment forums like Reddit? It depends on how knowledge you are about stocks in general. If you go onto Reddit as a new retail investor, you don't know anything about stock, you should never buy anything you read from there. Like, you should make your own research, because Reddit, just as other Facebook forums or forums at other banks, they can be full of actual trash. Like, they are just trying to pump their own stock, making a profit that you take a fast and quick and stupid decision. But if you're into the business that they are discussing on Reddit, and you maybe know a lot about that specific stock that they are discussing, read it and see what other people have for opinions about the company that you actually enjoy. But always be careful when it comes to forums, and trust like news and analysts more, but still be always very critical to what you read. If I have a fund with a mix of companies and I am now interested in investing in stocks, would you recommend in investing in stocks that is not included in the fund? It depends on, of course, like which companies you want to be exposed towards. If the fund invests in, for example, only banks, and you want to buy a tech company, of course you should go and buy that tech company if you believe in it. It's never wrong to mix funds and stocks. I do that all the time. I have several stocks and I have a few funds, because I usually buy funds when I don't feel that I have the greatest knowledge in that specific industry that the fund is investing in, because then I know I can have a greater trust in that investment than if I took a decision by myself. So if I invest, for example, right now, I have moved some of my money towards banks, but I'm not that well like read on banks and well knowledgeable about banks. So I bought a bank fund that is only invested in different banks, because I trust that better than my own knowledge right now. But I'm still reading a lot about banks right now, so maybe I will switch that up and sell that fund and buy some more specific stocks in banking instead. Any good books you can recommend? Actually, I don't read that many books when it comes to like stocks and things like that. I mostly, where I get my most knowledge is that I do my own research by Googling and then going to like reliable sites that I have found. Like, I'm not saying that sites I don't use is not reliable, but I maybe have like a greater view from my own opinion on different sites. So I use sites as Investopedia, The Motley Fool, Bush Data, I think one of them is called, and of course podcasts. And one in Swedish I listen to as often as I can is Börspodden, and these two analysts that basically run their own analyst company, and it's so fun, and they are so good at discussing different industries, different companies, and giving recommendations and not recommendations. So it's podcasts and articles that I follow the most. What's an idea portfolios to What's an idea portfolios to have, as in what is the ideal number of stocks to have? Having too much stocks is a hassle. Yeah, completely true. You should not have too many. I would say everything between 10 and 20 is good. Like, the average they recommend is over 12, but I would say between 10 and 20 is good for anybody. What's your view on cryptocurrencies? Super riskful, super interesting. You need to know so much to go into there and to start investing from them, or in cryptocurrencies. I would never recommend that to a young person who have just started investing. But if you have your knowledge on the right side, this is a perfect example to why you shouldn't listen to trends. Like, right now, the mainstream media and a lot of articles is about cryptocurrencies. Don't go and invest blindly on those articles. Go towards and make your own research, listen to podcasts, read some books, read articles that is maybe not focused on why you should buy them, but also why you shouldn't buy them. So you get both sides of the coin, except is a good way of saying it. You should always do so much research, especially when it comes to riskful investing. Let's see.
So it's one last question, then we can take up from there. But if anybody have other questions, then they can direct them to Carl later on.
I'll say one more. I think, no, I think we're done. All questions is answered. So that was the presentation from me today, and I hope you really enjoyed it.